colleague Yatin Mota. And what a terrific day for markets. Bulls are back roaring on the Dalal Street. Sensex rose as much as 1400 points and settled above that 79,900 mark. And Nifty, that also rose over 400 points and settled above that 24,150 mark. So some short covering could be visible as FIs return from a New Year's holiday as well. However, what led to the rally? Three sectors that definitely drove the markets forward. That included your auto, IT, as well as the financial stocks. Auto stocks definitely fared well after the December sales figures were ahead of the street estimates, and IT stocks rose ahead of the Q3 results, which will be starting next week. So brokerages have indicated that there could be some recovery for the IT names, and we will watch out what the management has to say as well. And of course, the financial stocks, Bajaj Twins did well, as well as Kotak Mahindra Bank, as Citi placed both of them under 90 days positive catalyst watch. We will talk more later in the segment as well. But Yatin, terrific Thursday for the markets. We defied the Asian markets weakness, and that too on expiry day.
Absolutely, and what a date has been. You may say that the FIs are back in India with some flavor of short covering or probably a pre-budget rally. But the fact of the matter is that we had a roundabout 500 points rally on the Nifty. Good short covering, especially the auto sector was in focus after good, monthly sales figures, much better than expectations. Big boy Reliance Industries, banks, Infosys, TCS, all of these heavyweights are clearly contributing to today's market rally. Obviously, the FI buy-sell figures will be watched out for, but it clearly seems covering is happening. Additionally, the domestic mutual funds are also lapping up shares from the open market. That could also be another reason which probably fueled the market rally, Lavisha.
That's right. Yeah, then let's take a look at some of the top Nifty 50 gainers and losers. However, Aisha Motors racing ahead after its strong Royal Enfield sales figures. We'll touch upon that more in detail also. But Aisha Motors up about 88% in today's trade. Maruti Suzuki also extended its strong gains to the second day after a bullish management commentary. Bajaj Twins doing well. Bajaj Finserv, Bajaj Finance seeing a surge of about 6 to 7% on Citi's upgrade. On the losing end, however, only two stocks were there on the Nifty 50 losers. That included your Sun Pharma and Britannia. Sun Pharma 0.6% cut. Britannia also just flat in the red as well. But mid caps but the party was visible in the broader end of the markets also. Yatin, take us to that.
Absolutely, and if you look at the gainers in the Nifty 500, we have a whole host of auto stocks. From Force Motors to Aisha Motors also doing a good amount of momentum. If you look at Sundaram Finance, Chola Holding, Chola Finance, all of these stocks rallied anywhere between 5 to 7%. If you talk about the small cap side of the market, Raymond's, that stock moved 5%, Railtel 5% higher, Sonata Software also gained nearly 4 percentage points in trade. But clearly, if you look at the top loser in trade today, that was Petronet LNG after some regulatory concerns were pointed out by Citi. They have a sell on the counter with a target of 310, so that stock remained under pressure. Profit taking continues in stocks like Suzlon, Crisil, as well as V-Guard. But yes, stocks like Reliance Industries, Bajaj Finance, from the turnover point of view, saw some good price and volume action.
All right, now let's break down some of the stocks that did grab the limelight on the street today. Well, the first stock in focus is definitely the Bajaj Finance, one of the top Sensex as well as the Nifty gainer. The gains came after Citi maintained a buy rating on the stock and shared a target price of 8,150 rupees. Citi has also placed the stock on a 90-day catalyst watch, citing positive expectations for the company's Q3 performance. In its report, Citi highlighted that marginal improvement in credit cost is expected, and they project them to rise slightly to 2.2 to 2.25% in Q3. Analysts have also forecasted about 6% sequential and 7% year-on-year growth in OM. Moreover, they expect net interest margins, which is your NIMS, to improve by 3 to 5 basis points in the December quarter. Now, this strong growth projection led by Citi is in line with what the management had projected in their Q2 con call as well. They did expect cost of funds to peak out and margins to improve on, and Citi has just elucidated the same as well. Then a very sharp rise for Bajaj Twins coming in after their underperformance last year. Do you believe that the stock's growth runaway has just begun this year?
Absolutely, Ravisha, and as you're mentioning that brokerage is also now turning positive. If you look at
Hmm.
Bajaj Finance, Bajaj Finserv, these stocks are marked underperformers in the calendar year 2024. But gradually, for especially for today's trading session, a lot of interest from the domestic funds who probably see it as a underperformer for the last 12 months, but probably the outlook will improve. Valuations also attractive at this point in time versus the historic highs that we saw for Bajaj Twins. Probably the reason why today a lot of interest are getting garnered, especially after the brokerage note. But another stock that I would like to point out, Lavisha, is that of
Hmm.
Kotak Bank. Today, Citi
Right.
upgraded the stock to a buy. Now the new target stands at 2070. Most importantly, Kotak Mahindra Bank has been consolidating as a stock for the last 15 months. We have seen peak valuations also come down. The transition from the management, which is the reins of Uday Kotak being handed over to the new management, is also something that the market was absorbing so many
Hmm.
quarters for now. But now Citi believes that the personal loans as well as the overall loan momentum for Kotak Mahindra Bank will improve. Not only that, they expect the credit cost expectations, which are already high in the marketplace, that will normalize moving forward. And also the regulatory restrictions which are currently placed by RBI, they are
Hmm.
also expected to get lifted off, probably aiding the overall additions of newer clients onboarding, especially on the digital channel. So probably the worst is behind us, and from here on, probably stocks like Kotak can outperform. Is the view coming in, from brokerages like Citi and something like a Bajaj Finance, Finserv. Kotak also is on the similar lines, which has probably underperformed the markets for the last 12-15 months.
That's right. Brokerages have to. And even Jeffries had, upgraded its counter to buy, and they believe that the
Yes,
valuations are
yes.
attractive compared to ICICI as well as HDFC Bank. But let's move on. Of course, the entire auto pack was vrooming and racing today. But the one stock that did become the talking point today was Eicher Motors. The stock jumped as much as 8% today and also hit a fresh record high after it posted strong December sales. If we break down the Royal Enfield sales, that number surged about 25% year on year in the December month. And both motorcycles, which is above your 350cc and below 350cc, they grew in tandem of about 25% year on year growth. The management too is quite optimistic for this year. They expect the performance to sustain and has also commenced operations of its first fully owned and operated CKD assembly facility outside India, which is in Bangkok. The company has also announced expansion of its pre-owned motorcycle business, which is your re-own, to 236 cities across India. Yet then, as I recall, Aisha's management had indicated a good festival season as well, and they also expected good volume growth from the second half. So the numbers completely reflect the similar positivity. A very good news for the company coming in.
Absolutely, and we have the Royal Enfield sales zooming by nearly 30% on a year-on-year basis, where the expectation of the market was close to 25%. Most importantly, the company has been able to move closely on the monthly run rate of 80,000 Royal Enfield sales, especially in the month of December, which usually sees lean sales. We have seen a 30% growth, especially Royal Enfield in one place and Maruti on the other. Their dealer inventory days have also dipped significantly, with Maruti telling investors and the media that now the overall inventory days have corrected and they have an outstanding uh, order book for 2 lakh new cars. So uh, auto sales continue to surprise, and the management commentary also is improving post the festive season versus the concern which were there at the start of the festive season. So I think the concerns are behind us, and today a clear breakout rate for Eicher Motors and Maruti stocks zooming 6-8% is a huge thumbs up by the markets today for the auto sector.
Absolutely. Let's move on to the next stock that did grab the headlines. That was your MFI linked stocks. For instance, Credit Access, Grameen, Spandana Spooty, all of these shares gained up to like 9% after Microfinance Institute Network deferred the implementation of limiting the number of lenders to three per borrower by another 3 months. Earlier in November, the network had proposed this cap, but now it will be implemented from 1st of April onwards. Now, this delay is expected to give time to lenders to manage their stress and delinquencies, since all the microfinance lenders typically lend to small borrowers with ticket sizes ranging from as low as 10,000 rupees. This does come as a temporary relief. Yeah, then now, while these MFI linked stocks did rejoice today, but it's a temporary relief because a lot of problems have not been addressed, like over leveraging of the customers or even their higher credit exposure. And, even the RBI Financial Stability had pointed out that the stress had nearly doubled from March to the September period. How do you deconstruct this?
So, if you look at the MFI sector, clearly there
Mm,
are headwinds in the sector. A lot of
mm,
social schemes by the state government getting discontinued, or probably the payout getting delayed.
mm,
That clearly impacts the collections for MFIs.
mm,
But given the fact that the stress is still evident, second half is something that analysts will be watching out for. This quarter number also everybody will be watching out for. So it is very difficult to say whether or not the MFIs are out of the woods, or probably the start of a bad asset cycle. In the sustainability report, RBI did point out that MFI sector, the NPAs are expected to increase. The bad loans are expected to increase. Whether or not they increase as per the market expectations or they do better is something that time will tell. But this is one sector which is clearly one sector wherein a lot of analysts are advising no go, or probably do not touch stocks until there is clarity on asset quality moving forward.
yes, absolutely. All right. With that, we've come to an end of this edition of The Closing Bell. It's a wrap from Yatin and me, and thank you for watching.